From two-wheelers to passenger vehicles, shares of automobile companies have been upbeat in recent days. Over the past 1 month, listed players like Tata Motors, Maruti Suzuki, Bajaj Auto, Eicher Motors, Ashok Leyland have rallied up to 14% as against 3% rise in the S&P BSE Sensex. So, what is driving auto stocks in the fast lane? Analysts point at fair valuations on easing market concerns and hopes of healthy March quarter results as some of the key triggers.
The stocks were in the oversold zone in the month of February and March because of the banking crisis in US. The market was down, and the steel stocks valuations were in the oversold zone category, and the valuations were looking attractive. So after the easing of the market concerns from the US banking crisis, the broad market has rallied, and with that, the auto sector and auto stocks have also rallied. So one of the reasons was the attractive valuation. Number two was the earnings growth trajectory for these stocks for almost all the auto OEMs and auto ancillary stocks was good. In Q4, we expect a good earnings growth for these stocks. And number three, some of the headwinds for the auto OEMs were subsiding going forward. For example, for the two-wheeler auto OEMs, the exports which were affected in FY23, they are expected to bottom out. And because of that, few stocks like Bajaj Auto, TVS, and Eicher Motors, they are doing well.
So far, auto majors Maruti Suzuki, Hero MotoCorp, and TVS Motor have delivered up to 49% year-on-year rise in net profit in Q4 FY23, whereas revenue from operations has climbed up to 20% year-on-year. But will this upside remain unhindered? Analysts feel otherwise. Walekar of Access Securities, for instance, expects rural distress to eat into demand patterns, which could lead to correction in related stocks.
For the CV, commercial vehicles, we expect some moderation in growth for the CV growth in FY24. The MHCV segment has grown by approximately 47% in FY23 year over year over the low base of FY22. And in FY24, because of the high base of FY23, we expect some moderation in growth for the CVs. For two-wheelers, the two-wheelers have also grown in FY23, but it's still lower than the peak of what two-wheelers achieved in FY19. So we expect the two-wheeler growth momentum to continue in FY24. For passenger vehicles, they have also grown robustly in FY23 in double digits over the low base of FY22. So we expect some moderation in growth for passenger vehicles going forward. For tractors, the growth outlook is slightly muted because of the high base of FY23 and also the lurking risk from the El Nino and monsoon and rural distress.
In April, total vehicle retail sales slumped 4% year-on-year, with two-wheelers and passenger vehicles declining in the range of 1 to 7%, showed data compiled by Federation of Automobile Dealers. Electric vehicle sales too saw sequential degrowth in April, with passenger vehicles down 32% and two-wheelers down 23%. Going ahead, analysts expect EV sales momentum to gather steam as FAME subsidy concerns fade out. Mumuksh Mandlesha, research analyst at Anand Rathi Institutional Equities, says though e-two-wheeler volumes were lower month-on-month in April 2023 due to concerns around FAME subsidy, we expect volumes to improve going ahead with clarity on incentives, lower cost, and product launches. As an investment strategy, analysts recommend traders to selectively buy the dip post the recent up move.
We recommend investors to stick to the buy on dip strategy. Because of the recent rally in the auto stocks, the valuations now look in a fair value zone. So we will stick to the buy on dip strategy.
Today on 10th of May, Q4 results, global cues, rupee movement and crude oil prices will dictate market trends.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.